Here we have the current stock market update for Supermicro Computer Incorporated, stock ticker SMCI. Before we begin, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts in the comments section below so that other traders will be able to find this information more easily on the platform. So here we have the 2-hour price chart, and as you can see, we've got sort of a dual Fibonacci analysis here. This is not exactly common, but I will be going through each of these price levels to explain clearly what they mean and whether or not reversal points are imminent or likely for this stock, so that hopefully traders are able to develop profitable strategy outlooks going forward. So as we can see currently, share prices have reached new lows coming in at 395.16. Overall, these price movements have been fairly extreme to the downside. I think we all are very familiar with what has gone on here. There was sort of I guess you can call it a hit piece, is the way some people would refer to it, a short selling note from Hindenburg, which did accuse the company of accounting manipulation practices. This can obviously be taken with a grain of salt. That this is Hindenburg's job. I mean, they're called Hindenburg for a reason. This is a short seller that looks for opportunities to sort of almost attack companies and sell stocks short. So this is exclusively what they do. So you can take that part of the equation here with a grain of salt, but clearly the influence on share prices here has been extreme. And as we know, this is a very volatile stock that is sort of subject or victim to some very broad price moves in both directions. I mean, if we simply look back, a short time ago, short-term history here, we can see that share prices did see a really monumental movement higher here from roughly $300 per share to $12.29. So this is the type of activity that is in some sense unsustainable, and we did see share prices move lower all the way to following lows at 671. So as we can see, this is a very volatile price movement here in a very short period of time. So, this is definitely a difficult stock to be trading, and it's definitely victim to sort of whipsaw price action in both directions. As a result, I think it's undeniable at this point that this is going to be a stock that is going to be characterized by extreme levels of volatility. And so, if you're not prepared to absorb some losses here in both directions, this really is not a stock that people should be looking to buy at the moment. This upcoming earnings report from the company will be critically important. There's a lot of explaining that this company is going to need to do within that report. So, until that happens, the overall picture here is quite uncertain, and we really do need to pay a lot of attention to the price levels themselves, because this is going to be the key indicator of where things go, in the days and weeks ahead. So as we can see here, the current price movements have developed price lows, very drastic lows at $395.16. Near-term resistance levels come in at the price zone that I have outlined in prior videos, which comes in right around the $630 mark. As we can see here, this is not only a point of historical resistance, but this is also the 38.2% Fibonacci retracement of the declining move from $963 to the current price lows. So this is a very strong level of resistance that is going to take a bit of work here to overcome. We're trading quite a ways away from that price level at the moment. So this is the price zone essentially that you would need to see break in order for, the bias to start to reverse to the top side here. There are a few different reasons I say this. In addition to the historical factor and the Fibonacci resistance factor, we also have this declining blue line here, which is the 200-hour exponential moving average. This is a 2-hour price chart. So what we're seeing here, is a fairly rapidly declining 200-period EMA, and I do expect this to start to come into contact with this $630 level relatively quickly. A lot of that will depend on how share prices behave here in the week ahead, and this could be a very interesting week and a very unpredictable week near term. It's very difficult to start to forecast price movements when you're dealing with this level of volatility. And it does really pay here to closely watch the price levels because this is going to be the main indicator of where prices are are likely to travel next. At the moment, one price level that I would point to as being particularly significant would come in right around $490. The reason I point to this area comes from the fact that this is an old support zone, which would now be expected to work as resistance. And then in addition to that, you've also got this price gap formation, which begins right at this area. So if we were to see a break above here, you could then expect to see a bit of a retracement higher, simply based on the fact that there is a price gap in this area that would need to be filled. So if you could see a price break above the 490 mark, you could get some free momentum, so to speak. Um, as share prices have to fill this gap. And then, we could see a movement, into roughly 515 fairly easily if you do see a break above 490. There is still some wood to chop, however, before we get there. I mean, we do need to see some evidence of a bottom that's forming, and this current close to the week, it looks extremely weak in my view. We did see a bit of a bounce here. Prices posted near-term highs coming in at 475. But those highs were short-lived. I mean, we did very quickly see a reversal point here, and the weekly close was not impressive. I mean, what this tells me is that people are not rushing into this stock to buy in at these lows, even though we have seen some very dramatic moves lower. I mean, this is a sequence of bear waves here that has unfolded, over a wide period of time here. And it does not appear at the moment that buyers are rushing in to save the stock at lower levels. If we do see more of a response from Supermicro and we're able to, and they're able to convince the market, that the Hindenburg report is not as bad as it sounds. It's Hindenburg's job to sort of, stir the pot and make people concerned and worried about stocks. I mean, it's the Hindenburg. I mean, I can't be any more literal than that. But they're looking for situations like this where, declining price moves can, help to promote, profit in short positions. So, if they can sort of discredit this report a bit, then you could start to see price movements higher. But I really do suggest, paying special attention to these price levels here, because we're really going to need this. The price levels themselves are going to be the main indicator of where the stock is currently likely to move. Given the fact that, increased levels of price volatility should continue, well throughout the following week. So this is going to be a very difficult stock to trade here in both directions. Here's the current market update for Supermicro Computer Incorporated, stock ticker SMCI. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.